Nifty gains as tech stocks bounce up after a rebound in Nasdaq overnight. Metals and auto real as well as realty also perk up, but FMCG and PSU banks drag.
US is imposing a hefty 126% initial tariff on imports of solar gear from India, Indonesia and Laos till it completes its anti-dumping probe. The levy is likely to hurt Indian exporters like Waaree Energies and Vikram Solar. The stock slump.
The government is offering up to 4% of IRFC's equity for sale to trim its stake towards meeting the minimum public holding norms. IRFC tells CNBC-TV18 it's on course to beat its guidance, but the stock slips on discounted offer price.
The Tata Sons board puts off a decision on N. Chandra's third term as chairman following Noel Tata's call for assurances on keeping Tata Sons private, curtailing losses in group companies and curbing high-risk capex. Governance experts hope the board will resolve issues on the matter. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we're seeing the markets rebound in today's trading session. We have IT stocks which are really leading from the front, but auto stocks are seeing buying in today's trading session as well. In terms of metals, what we are seeing is that the likes of BofA Securities has upgraded Vedanta to a buy from neutral with a target price of around 840 odd rupees versus 480. So as you can see, that stock is up and active today, so up around 5 odd %. And Polycab, Motilal has a buy on that stock. That stock has been buzzing for around 2 to 3 days, so up around 3 odd % for that particular counter with a target price of now 9,600 odd rupees. So a lot of stocks which are buzzing within the broader markets, a lot of sectors which are seeing buying, and we're going to cover all of that and more in the next 60 odd minutes.
Hi, Ekta, good afternoon. Yes, a lot of sectors, a lot of moves that are coming in on the broader end of the market. But yes, do not forget metals, ITs, that continues to shine. PSU banks, they did slip in the red. Let's look at where they have gone as well. Nifty PSU Bank seems like they've made a bit of a recovery for the Nifty PSU Bank. As of now, seems like it's managing to hold on to some bit of a green again. Okay, it's still continuing to trade in the red. So I'll refresh my screen, but PSU Banks continues to be in the red. So that's come off the day's highest point. Let's also look at the advance decline ratio, more in the favor today of advances versus decline. The gap between advances as well as decline still is there. We'll keep an eye on that. 1,700 stocks almost on the advance side versus the declines. A lot of individual names that are under pressure are IRFC, Hindustan Petro, then we have Chalet Hotels, Waaree Energy, Premier Energies, all of them continues to be under pressure as well, Ekta.
Okay, all right. But let's tell you what we have on the show today. We will be focusing on the solar stocks, which are buzzing on the back of US imposing that hefty 126% tariff on imports from India. We will be joined by the management of Vikram Solar to break down the details of this. In our What's Trending segment, we will put the spotlight on weight loss drugs amidst Novo Nordisk cutting the prices of Wegovy and Ozempic, as well as Biocon's nod for a weight management drug. And in our Commodity Corner segment, Manisha will put the focus on metal prices firming up amid a weaker dollar. Stay tuned for all of that in the next 60 odd minutes.
Okay, let's move on and talk about the solar names that are in focus today as well. And obviously that duty that has come in of 126% on Indian solar imports. There was that investigation which was going on, so this was expected. But we're seeing the stocks under pressure. Vikram Solar has almost 16% exposure to the export market. Waaree Energies has around 28.6% exposure. So we'll understand from the management now of Vikram Solar what this means for them. What is the strategy going forward as well? And to talk to us about all of that, we have Gyanesh Chaudhary, who's the chairman as well as the managing director at Vikram Solar, joining us right now to speak to us on that. Mr. Chaudhary, good afternoon. Thank you so much for joining us on the show. So obviously this duty is something that was anticipated and expected because that investigation was going on. Now this 126% that is announced, could you tell us what is your export to the US market? You have 16% overall global exports that you have. US is specifically how much? And in terms of what would be the impact now in terms of revenue and margins for the company from here on because of this?
Thank you so much for having me. First of all, let me explain to you what's happening with this duty that has been announced. We all know that the US markets have been phenomenally turbulent, and obviously this 126% duty on the face of it seems like it's going to bring Indian solar exports to a grinding halt, but that's absolutely not the case. The way the structure of the system is that the fine line is that the cells are they have the duty, they're not the solar panels. So the effective rate of duty is applicable only cells, whether made as a module or on its own cell exports. So effectively, Indian solar manufacturers who are pivoting towards other sources of cell supply will not have this duty applicable, whereas Indian manufacturers with quality and reliable solar exports will be able to export solar panels made from India, but with cells sourced from other regions with lower rate of duty. Okay. Now, coming to your question, as far as Vikram Solar is concerned, our exports have been consciously pivoted towards the domestic market. The export capacity in the last year was quite low, considering the changes that are happening in the global scenario. We consciously pivoted towards the domestic market, and we have fairly secured a significant market share. And going forward, we continue to have those order books. As far as the export is concerned, we see how our supply chain strategy in the last year and the going forward years, we will be able to secure larger supply from non-tariff sources or lower tariff sources across the world, while catering to the US markets also.
Yeah, but Gyanesh, what is the US exposure? If you look at your Q3 order book, what would be your US exposure to the one where you are seeing these duties coming in?
Nil. It's absolutely nil.
Okay, so for the cells which you are talking about and this 126% duty that you will have coming in, for those specific cells, you do not have any export exposure there?
Absolutely not.
Okay. Well, Gyanesh, in that sense, how much do you think this 126% duty can possibly hurt the industry? I'm asking from an industry perspective as compared to just your company in specific.
Thank you so much for the question. I think manufacturers like us who have been in the international market for the last 10 years and also catering to the domestic market for over 2 decades, quality, reliability, and technology makes a very big difference. And what our go-to has been is to ensure that our US customers or any customer for that matter is getting the world-class, best-in-class solar panel. And for that, I think companies like us will be least affected because we have those pivots in place. Knowing supply chain, knowing the changes in the international tariff and geopolitical dynamics, we have pivoted significantly over the last years. And so would most of the other large players who are exporting, which are not so many, as so to speak, in India. And for those reasons, I think the impact on the exports overall would be quite limited. And if you see that the overall percentage of Indian exports in the overall US import of solar panel is not more than 4%. And that 4%, if you translate into actual product coming out of India, is a little over a gigawatt. That does not significantly impact our overall projections for the year, for the quarter, or for the next fiscal.
Okay, so just tell us, if we were to have this conversation same time next year, Gyanesh, tell us what the breakup or the pie of your revenue share would look like. What are you trying to pivot into? Which are the markets that you're trying to pivot into? What is the market share right now? And how much do you expect it to possibly go up to in the next 12 months?
Absolutely. I think looking at the current US dynamics, our business has already pivoted into European markets and APAC markets. We look at taking significant positions in those markets in the next fiscal and the going forward fiscal, considering there has been significant changes in how Chinese exports are happening. Earlier, they were privy to a lot of fiscal and non-fiscal benefits exporting out of China, and that has significantly come down and almost vanished. So the parity, the cost parity and the pricing parity has significantly pivoted in the favor of Indian manufacturers like us. So we hope to see this pan out in the next quarter and the next few quarters.
Okay. Gyanish, while obviously today you have just announced a big order win also that's coming for the company. I believe it's around 378 megawatt of high efficiency modules, and this is going to be for some NTPC green energy. There's a JV there. You're planning to deliver it by FY26, I believe. Commence it. It's expected to commence in FY26. I beg your pardon. But given these order books, one, could you highlight us, what is your market share currently in the domestic front? You're having so many domestic order wins that come in. So domestic market share, as well as the opportunity now you see for data centers in the domestic front as well. Everyone's talking about those green data centers, right? So what does that mean for you?
Thank you so much. So as far as market share is concerned, we would be in the range of 10 to 12% currently, significantly increasing over the years, over the next fiscal and the fiscal after. As far as AI and data center is concerned, it's a huge opportunity. I think it's unprecedented how this is going to pan out for renewables. I was recently at the summit, as well as have been reading all the various posts that have been coming out. It's a huge opportunity for India. AI will not operate without renewables. That's a fact. And to be able to do that, India will need to deploy a huge amount of green energy. We have recently seen the government announce enhancement and augmentation of the national grid by supporting Power Grid Corporation and other things. So the government is also doubling down on green energy infrastructure, and this will change the dynamics from where we are today to what we want to achieve, which is 500 is what is the total, which is the said number, but it does not, mind you, incorporate AI deployment. So this is going to significantly increase going forward.
Okay. All right, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So important clarification, in fact, coming in from Vikram Solar, that they do not have any kind of exposure to the US when it comes to this 126% duty subject. So important clarification which is coming in as this point in time.
Because the thing is that I think this 126% duty, what I understood, comes in for those modules which have maybe those cells which are made in India. So if that cell is included, those made in India cells, then they start charging the duty of 126%, so which they do not have exposure to.
Yes, so that obviously is a positive for Vikram Solar. Maybe the market will take some cognizance of that. We'll take a short break, but up next we'll connect with Rishi Vora, who's the analyst at Kotak Institutional Equities, to focus on the auto sector. Stay tuned. Welcome back. Well, just about higher by around 0.7% currently for the Nifty. We have the Bank Nifty, which is higher by around 100 points at this point in time. Good time then to discuss the entire auto space, which is just shining away and gaining in today's trading session. This is after the Vahan Feb registration data indicated, strong demand. But let's discuss this and more. We have Rishi Vora, who's the analyst at Kotak Institutional Equities, who joins in now. Rishi, hi. Thank you very much for taking the time out and speaking to us from the sidelines of your conference. Just wanted to start by asking you about this Vahan Feb registration data, where it says that, Feb 2026 is likely to be the best Feb in terms of a month, in terms of registration, at least since 22. So just wanted to ask you about whether you've looked at this data and what your reading is.
Yeah, hi team. Thank you for having me here. If you look at post the GST cut, the auto sector has been on an uptrend. Festive was bumper, and even beyond festive in the months of December, January, and including February so far, we are seeing very strong demand trends across all the categories. What we are expecting, at least in two-wheelers and passenger vehicle segment, looking at the current trends so far in the month of February, we'll see a healthy, let's say, double-digit growth, mid-teens, maybe can go closer to 20%. And even commercial vehicles and tractors are tracking even about 20% at this point in time, and tractors maybe even closer to 50%. So, it's just that post-GST cut, the demand momentum continues to sustain. It is quite broad-based. Obviously, some categories are growing faster, but everything right now is in a very strong double-digit zone, and which is kind of we expect at least it to sustain over the coming months as well, at least till 1Q of FY27.
Okay, so you're expecting this strong momentum to continue for Q1 FY27 as well. Rishi, good afternoon. This is Vinny joining in the conversation. What is also interesting specifically is on the two-wheeler side. ICE retail volumes, that's seeing a growth. EV side, that's seeing a growth. Now, specifically, if you have to divide between two-wheelers, where do you see in terms of moves coming in from the company? Which company do you think will gain more market share? Because Ola Electric has been losing share in the last few quarters as well.
Sure. So maybe starting first with the electric vehicle segment. This year, full year FY26, we'll end at maybe around 20-25% growth, and we do expect that trend to continue going into FY27 as well. Now, obviously, Ola, because of multiple challenges which they had faced over the last couple of quarters, their market share from peak of about 40% has come down to mid-single digit. We do expect that at least majority of the tailwinds for other companies because of Ola's market share loss has now come through. So incrementally, the growth for each player will be more driven by, the first is obviously the industry growth, and second is the product interventions which they do. At least among the coverage which we have, we believe that TVS Motors, which is the leader at this point in time in EV two-wheeler segment, will continue to outpace the industry growth. And obviously then, Hero, Bajaj and Ather are also doing quite well. But I think TVS will continue to, maintain its dominant position in the electric two-wheeler segment. Talking about ICE two-wheeler, over there, at least our view is that the premium motorcycle, which is above 150cc, and the scooter segment, ICE scooter segment, will continue to do well and will continue to outpace the industry growth. And again, over there, at least we believe Eicher Motors and TVS do have a higher saliency within that portfolio, which should benefit. Bajaj has underperformed over the past 1 year, at least in an overall ICE two-wheeler category. Now they have a couple of product launches over the next couple of months. So we'll see how it goes for them. But overall, we do expect at least TVS Motors in this mass market category to continue to outpace the industry growth in both EV and internal combustion segment.
Okay, all right. That point is taken. In terms of what you're recommending to your clients right now, what are the top picks within the auto space?
We like Mahindra & Mahindra, Maruti, TVS Motors and Tata Motors commercial vehicle segment. Again, TVS, we did discuss that at least the company continues to do well in domestic market. Even in exports, they are doing better than the industry growth, and we do expect that trend to continue going into FY27 and beyond. Mahindra & Mahindra, again, they are doing well across all the categories. I did mention about tractor as a segment is growing quite well. Obviously, fourth quarter, we might see closer to 40% and higher growth for the industry, and Mahindra clocking in similar growth in that segment. LCV post the GST cut after 2 years of muted demand environment, that category has also started seeing a strong rebound. And even in SUVs with the newer launches in the month of January, XUV7 XO and a 7-seater EV, I think at least in SUVs also we do expect healthy double-digit momentum to continue. And stocks valuations continues to remain quite attractive. So to that extent, we continue to like M&M. And even Maruti for similar reasons where today, the demand is actually outpacing the production. So the constraint is on the production and the newer capacity comes for them in first phase is coming in the month of April and then in July. But we do believe that the demand tailwind will well extend beyond first half as well for the company. And then next year there is also 8th pay commission. So we'll also do see that tailwind flowing through, especially in the passenger vehicle segment. So we kind of like both of these names on the passenger vehicle side, TVS on the two-wheeler side, and TMCV on the commercial vehicle side.
Okay, Rishi, thank you so much for joining us this afternoon, speaking with us about the outlook for the auto sector, individual names as well. Thank you so much for joining in. But on that note, we're going to step into a very short break. And here's some good news that's coming in for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens. Welcome back to Halftime Report on CNBC-TV18. While we're seeing metals continue to shine, the Nifty overall is managing to hold on to very strong gains as well. And IT Pack 2 is trending upwards today in the trading session. But on that note, let's bring on board Manish Hatiramani, proprietary trader and technical analyst at Deen Dayal Investments, joining us to speak to us about the technicals on the markets. Manish, good afternoon. Thank you so much for joining us on the show. Today, at least, we're seeing some bit of a respite coming in for the markets. Now, what are the key important levels that we're keeping an eye out on? Beginning of the new series started on a strong footing.
Good afternoon, Vinny. Thank you so much for having me on the show. Well, we have a very strong support at 25,350 to be precise. And if you notice the last few days, we have attempted that support thrice. On the 13th of February, 19th of February, and yesterday, 24th of February. We are currently in a sideways zone, which is between 25,350 and 26,000. We need to really get past either levels for a trend to emerge. If we break the levels of 25,350 on a closing basis, we should slide down to the next support of 25,000. If we can get past 26,000 on a closing basis, we should be targeting 26,400.
Okay. Well, just wanted to ask you about a couple of these stocks which are buzzing around. Concord Biotech, if you've seen that stock, it's up around 12.5% at this point. And we have a couple of others which are moving quite smartly as well on the upside. Something like an Aether Energy is showing a good amount of volume traction. Any call on these two?
Well, on Concord, while speaking to you, I just had a look at the chart. We are at a resistance level now, which has been achieved at about 1200. We really need to get past this, close above this, and then we'll be able to reevaluate on the charts.
Okay. And Manish, any individual names that you're looking at or one should look at from the mid and small cap side?
Well, I'm working with 3 large caps, a mix of buy and sell because we are currently sideways. There's a solitary sell call on State Bank of India, which is for a target of 1190, stop loss of 1230. After spending some time in this range of 1220 to 1235, we have broken the lower end of the range and volumes are supportive of this move. One buy call on Titan, which is for a target of 4440, stop loss 4220. 4190 to 4260 was a sideways range for this stock for quite a few sessions. 4130 was a strong support. That is where we have bounced from. And we are also breaking out on the back of good volumes. And the last buy call is on ONGC for a target of 290, stop loss of 264. Similar situation like Titan, where we have broken out of a sideways range.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Manish talking about the technicals of the market. Some news coming in from TCS where they've partnered to bring AI-powered orchestration to accelerate software innovation. They've partnered with GitLab. As you can see, the stock is up around 2.5%. But remember, there's been an IT pullback which has taken place. Some incrementally positive news for TCS. Time now for excerpts of our chat with ITC Chairman and MD Sanjeev Puri. Our colleague Shilpa Rani Petta caught up with him on the sidelines of the NASSCOM Technology and Leadership Conference on a whole host of things: consumer demand, cigarette prices, and more. Listen in.
Well, I'm not going to give you any guidance, which we don't do, but what I will just say is historically, whenever taxes have increased sharply, it has fueled illicit industry.
Yeah.
And the legal industry has suffered.
And that's something you've called out very regularly.
Yeah, and that's a trend that's always been there. Now, from the beginning of the last decade, 2011-12, almost towards the end of the decade, with progressive increase in taxation, legal volumes really declined. There was stability after that, which helped legal industry claw back. But whenever there is an increase, what has happened in the past is likely to happen. So I think it will fuel illicit.
Right, but how do you then deal with the situation? Do you think that it calls for a portfolio play? Any change in that strategy there? I'm just trying to understand how is ITC going to mitigate this?
Yeah, I'm not going to give you details like that, but it has to be a combination of portfolio, pricing, all of these will unfold over a period of time. So beyond that, I'm not going to say
And how
anything.
much price hike have you already passed on?
Well, let it come to the market. The old, there's always a trade pipelines are there. Let them get exhausted and the new prices will come to the market.
I mean, just some timeline, some color. Like, are you looking at a phased manner by from your end?
It will be in steps.
Okay.
Given that it's a very sharp increase, it will be in steps.
Okay.
Welcome back. Joining us on the show now is Kunal Shah from Nirmal Bang Securities. Kunal, thank you so much for joining in. And it really seems to be metals for the last couple of days which continue to buzz on the higher side, whether it is about metal stocks, metal index and the underlying metals as well. Copper in the overnight markets has gained. Tin has been a big gainer. Zinc price is near its 3-year highs. What is it that you're looking at as a macro which is supporting all of these metals and then the individual fundamentals also?
Okay, so first, let us go to the macro. And the macro, the big thing is after the China started, we've seen the Trump tariff have been slashed. And if you look now, the effective rate, what China was tariffed earlier and now, so the difference is 8%. So I think China and Brazil remains two economies which are going to be significantly benefited by the new tariff. Okay, and I think that is clearly being visible in metals. So if you see what is being happening, there is a massive amount of restocking going on in metal space, and that's the reason why metals are behaving the way it is. So I believe that with the 15% tariff, we don't know if this gets changed going forward. What Mr. Trump does, we don't know. But as of now, I think China is in a win-win scenario where the tariffs have significantly lowered for them. And this is very positive if you look from the commodity demand point of view. Second, I think the way the AI theme is progressing right now, the demand from the data center. So we were just working on the number. So if you take a number of the demand growth from EV, clean energy and the AI, I think in next 3 years, the demand for some of the metal like copper is going to rise by 3 to 3.5 million tons because of this new age demand. So if you look at a scenario where the concentrate supply is not moving up and the demand growth is significantly picking up, so the fundamental itself is very bullish right now for metals. So forget about what happens with the US, China, tariff, no tariff. So I believe the way precious metals outperformed last year, this is the year of base metals, and base metals are going to perform significantly well during the year 2026 and perhaps even more. So very bullish call for copper, number one, followed by aluminum, followed by zinc. So the outlook is very bullish, and I'm very bullish on copper. I have revised my target for copper for 2 years to $16,500, $17,000, which is currently trading at $13,000.
Kunal, copper, of course, you've been bullish on and you've revised your target further on to higher in this sense. How are you also looking at aluminum, tin especially? There are various reports suggesting that barring solar, there are various other industries which seem to be moving towards these proxy metals given the fact that the silver prices have surged so much.
Yes, there is a substitution taking place, especially from the solar panel producers. And that is clear. That is also supporting demand of these other metals. But I think the key message why the metals are doing well is we have not seen a sharp growth. But now the refined growth in all of these metals is getting curtailed. So the smelting capacity in China is getting curtailed. And that is at a time when the demand growth is picking up from the new age demand drivers. So China adopting the involution policy at a time when the demand growth is rising. So I think this is a clear scenario that even aluminum $3,000 looks to me bottom for me, and aluminum is heading towards $3,400, $3,500. So when you talk about a 10% upside in a metal, the size of it, which is 78 million tons, and that commodity is going to move up by 10% is quite hefty. So I'm very optimistic about the outlook on aluminum also, followed by zinc. And I believe that even tin likely to do well. So all of these industrial metals, the outlook is very bullish.
How are you also looking at silver in that in the same light? Because overnight has been strong gains. We are back above $90 an ounce onto this one. Further gains now on charts?
Okay, so silver, I think we need more catalyst. Okay, so I've been studying and I've been reading a lot of articles, and the only one reason, which makes me believe that silver is again going back to that 120, 130 level is the battery. I mean, if you study, the Samsung is working on the electric battery. So something of this invention takes place, the way solar took place 4 years back, and that drives the demand from here. Because I see the industrial demand at these levels remain quite muted. It is just the investment demand. And remember, unlike gold, no central banks are buying silver right now. So in gold's case, there are central banks who are buying gold, but that's not the case with silver. So if the industrial demand doesn't meet with the investment demand, okay, if the prices move up and industrial demand remain muted, then it's not possible for silver to perform. So I see a stiff resistance for silver, $95 to $100 maximum upside in near term, until we see a scenario that some new age demand. So I was reading an article where say that silver ion battery can give on a single charge, it can produce a 950 kilometers of range. So if this battery comes up with a commercial production, and that drives the silver demand, that is a different scenario. So that triggered the upside momentum in nickel a few years back. So something like that, if comes, then silver can go up to 120. Otherwise, $9,500 is the maximum upside for silver.
Okay. Surely keeping an eye out on that number over there for silver. But Kunal as well as Manisha, thank you so much for joining in. Kunal and Manisha, thank you so much for taking us through that conversation as well. On that note, we're going to slip into a very short break. After the break, we're going to be focusing on weight loss drugs, and that's going to be our What's Trending segment for today. Stay tuned in. Welcome back to Halftime Report on CNBC-TV18. We have some news for coming in for Vedanta at the bottom of the screens. The board has approved a fundraise of up to 3,000 crores, and this is going to be via NCDs. Vedanta today obviously is also in focus on the back of some brokerage reports that have come in as well. So keeping an eye out on Vedanta as well as the metals pack. But let's move on and talk about a What's Trending segment today, and we're going to be tracking the weight loss drug market as it is heating up. Global pharma company Novo Nordisk has taken sharp price cuts of its weight loss drug Wegovy as well as Ozempic in the US market, and this has made a few brokerages turn cautious on the generics like Dr. Reddy's. Meanwhile, Biocon has also bagged some US FDA approval for liraglutide. Now, what does this mean? Let's go across to Ekta, who's tracking all of this. Ekta, over to you.
Well, yes, weight loss drugs continue to be in focus. Now, we do have Novo Nordisk, which has slashed the prices of its key weight loss drugs, Wegovy as well as Ozempic, in the US markets by 50% as well as 35%. Remember that the market share has been rising for Novo Nordisk in the US, for rather Eli Lilly in the US. So it's risen to 58% for their weight loss drugs as compared to Novo Nordisk, which is at around 42%. Now, remember that these steep price cuts also come on the back of Novo Nordisk's next generation obesity candidate, CagriSema, actually failing to prove it was non-inferior to tirzepatide, which is basically Eli Lilly's drug Mounjaro, in trials. So there has been a lot of information with regards to Novo Nordisk, which was basically on their new obesity drug candidate, which did not meet expectations, as well as then followed by the steep price cuts that they've taken on Wegovy as well as Ozempic. Now, what does this mean for Indian companies? Citi, which has a sell and a target price of around 1,070 on Dr. Reddy's, has said that Novo Nordisk may opt for similar price cuts in markets such as Canada as well as Brazil. Citi says they are cautious on generic semaglutide potential for Dr. Reddy's and estimate 50 million for FY27, FY28 in Canada, which is lower than what the street is estimating at this point in time. So if in case they could take such steep price cuts in big markets such as the US, maybe they would possibly do that for Canada, and hence other generic companies such as Dr. Reddy's, which are looking to launch, could probably find it tougher in order to gain market share because the innovator is anyway selling the drug at a lower price. Now, additionally, in terms of the entire weight loss market today, we have Biocon, which is in focus because they've received US FDA nod for liraglutide injection. This particular drug is used in the treatment of chronic weight management, and the market size is around $127 million. Remember that this liraglutide molecule is not as popular as tirzepatide, which is Mounjaro, or semaglutide, which is Wegovy, as well as Ozempic, but nonetheless, it is an important drug development or a drug approval that they've received. They have indicated that they've received approval in the UK, they have launched the drug, and it has picked up pace for Biocon. So the street will wait and see what exactly the pace of drug launches or the pace of this particular drug would be in the US markets. Let's in fact listen to Dr. Reddy's G.V. Prasad. I did interview him from the sidelines of the BioAsia Summit last week. We did speak extensively on the entire semaglutide opportunity. Listen in.
As things stand, there is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
So all of
stopping us
sort
from
of the outstanding issues you would say are resolved at this point?
More or less, yeah.
Okay. Any kind of site inspection?
Usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
Welcome back to a halftime report on CNBC-TV18. If you look at the Nifty chart, from where we started the show, we've seen a beat-to-foot decline coming in for the Nifty, specifically in the last 1 hour. Now, the Nifty is managing to hold on to just 0.2% of gain. It's below the 25,500 level now. 25,480 is what the Nifty is at, 56-point uptick there. Though the broader end of the market, that is still continuing to where it was in the last 1 hour. Not much of a change there. Still holding on to 0.2% of gain. And IT index, that continues to be in terms of the top sectoral gainer along with metals. Keep an eye on that. But with that, we're absolutely out of time on this edition of Business Lunch. Thank you so much for tuning in. Up next, time up for halftime report. Up next, your Business Lunch. Take you through all that market action.